Thanks for joining us at XM.com for this special report. We'll be having a look at the year ahead for commodities. I'm Cristina Marujas. Joining me today is Senior Investment Analyst Rafi Boyajian. It's been a great year for gold, Rafi, as the pandemic and the worldwide plunge in interest rates has boosted demand for the safe haven commodity. However, the recent vaccine-led risk on trade has been a bit of a drag on the precious metal. What should we expect from gold prices going into 2021? Can gold maintain its bullish trend?
Well, Christina, it certainly has been an incredible year for gold. It is up about 23% in the year to date. However, since August, gold prices have been steadily moving lower, although in the long term, the uptrend is still intact. There are risks to that bullish trend going forward. For one, we do have, of course, the recovery, the risk-on theme. So as we see those vaccines being rolled out in more and more countries in the coming months, and we finally start to near the end of this dreadful pandemic, that will definitely be a negative force in gold's uptrend because, of course, risk on is negative for safe haven assets. The other risk for gold prices is the fact that on the geopolitical front, things might be much calmer once Joe Biden is sworn in as president of the United States, and also hopes that trade tensions with China will also ease substantially, or at least there will be less of a risk of trade tensions spiking up again. But of course, one of the main driving forces of gold's uptrend has been the weaker dollar, and that trend for the US dollar will likely continue in 2021 because, of course, the Fed has already said that it's going to maintain its ultra-easy monetary policy, and that monetary stimulus has not just been negative for US yields, it also means that yields globally are being capped. So as long as things stay that way on the monetary policy front, that will support gold for the foreseeable future. So on the whole, we do have threats to gold's bullish outlook, but for the time being, even if we do see continuation of the risk-on theme, as long as the dollar remains weak, then gold prices will be in for a chance in order to make a fresh push higher.
Now, turning to oil, after a tumultuous year where we saw WTI futures turn negative for the first time in the commodities history, oil prices look set to end the year on a more positive note. However, we've yet to cross the finish line as far as the pandemic is concerned. So are there any dangers for the outlook ahead?
Well, there are a number of dangers, the main one being, the doubts about whether or not this uptrend is sustainable based on the fact that has the good news already been priced in, because gold prices have recovered quite substantially from those lows from way back in March. So the huge stimulus we've seen both on the fiscal front and monetary policy front has ensured that the global economy does start to rebound, and we've seen pretty strong rebound across the world in the United States, in Europe, in Asia as well. So that has led the forecast for demand being upwardly revised. But more recently, although we did start from being overly pessimistic about the demand outlook for oil, and then we saw those upward revisions to demand, now we're seeing the demand forecast being somewhat revised a bit lower because investors may have gotten a bit ahead of themselves, and we're likely to see a slightly more slow recovery than had been hoped, at least as far as oil prices are concerned. For example, we just had that new virus strain being discovered in the UK and also in Europe, as we've seen the continent going back into lockdown, and those lockdowns could last up until the end of January, maybe even longer. So still a long way to go until we see a full recovery. So there's question marks about how much further can oil prices rally. And also we are going to see oil production start to increase come January. OPEC have agreed to increase supply by 500,000 barrels a day. And one important change coming from OPEC is they're going to be holding monthly meetings as of January, which means they're going to be discussing every month whether or not to increase supply further. So that could create more volatility for oil prices heading into 2021. And then, of course, just as we saw with the winter lockdowns, that again raises the whole question of how quickly we're going to see a full recovery based on those hopes that vaccines will bring an end to the pandemic rather quickly. Just as I mentioned for the outlook for gold, the vaccine rollouts might turn out to be much slower than anticipated. So that's one thing to look out for. On the whole, though, if we have to look at commodity-linked currencies, specifically oil-linked currencies, on the whole, the outlook is fairly bullish for the time being. So that should keep currencies such as the Canadian dollar supported in the coming months at least.
And finally, Rafi, let's take a quick look at metal prices, because despite the virus-induced global economic crisis, it's been a very strong year for metals, particularly for copper, which is often regarded as a leading indicator for economic growth. Is this a sign that the worst is behind us? And how much further can the price of copper and other metals rise?
Well, that is the big question. So is the worst behind us? We thought it was, and now we're seeing this strong resurgence in Europe and the US since September, and it seems to be getting worse. Governments thought they could avoid going into second lockdowns, and we saw many countries going into strict lockdowns, and we could see yet more lockdowns in the winter months. So that could hamper the growth prospects for 2021. On the whole, though, one important thing to remember here is that the manufacturing sector or the industrial sector, which consumes these metals such as copper and iron ore and so on, they have been less affected by the pandemic. So even if we do see the overall recovery being negatively impacted by this virus resurgence, there's going to be less of an impact on the industrial sector and hence less on metal prices. And in particular, if you look at China, which is the biggest consumer of these metals, its recovery has been gathering pace in the past few months. So we do have strong fundamentals supporting the rise in metal prices. That trend should continue into 2021, given that there's still a long way to go in the recovery. One negative factor here is the rising tensions between Australia and China. Although China has so far resisted imposing tariffs on Australian imports of resources such as metals, mainly restricted those tariffs on agricultural products and so on, but things could get worse there. So that's something to keep in mind, which could affect metal prices. On the whole, though, as long as we do see this global recovery stay intact, we should also see higher metal prices. The one thing that could possibly affect metal prices later in the year is if we do see signs of, say, some central banks or some governments signaling that they want to withdraw some of the massive stimulus that they've pumped into their economies.
Rafi, thank you so much for joining me today. This was a special report on the year ahead for commodities. Thanks for watching at xm.com.